Adidas reporting first quarter results today, seeing a 19% decline in net sales as 70 to 80% of its stores worldwide are closed right now because of the pandemic. Sat down this morning with CEO Kasper Rorsted to discuss what he's seeing in the business. Take a listen.
The interesting part was in the first 2 months of the quarter, we grew 8% excluding Asia. So at that point in time, everything was really normal. And then we saw a dramatic, basically falling off a cliff early mid-March that led to that 70 to 80% of our business was closed down. And of course, if you operate in an environment where only Korea, China, and online is up in a global company, that is, a huge change in our business model. And that meant that we had to move from a P&L to a balance sheet. So probably the biggest change any of us have ever seen running a business.
China is back online, you said, after being closed for a good portion of February. What are you seeing in terms of resumption of normal buying activity in stores?
So what we're seeing is China started to open up in the beginning of March, and it's more or less from our side fully open. We still see lower traffic in the store and lower conversion rate. But what we are seeing is online by the end of the quarter was higher than normal. Own retail was pretty much on par, and our franchise partners are below. So we're seeing people are slowly coming back into the stores, but we're seeing the conversion rate is lower, and also the average transaction, I would say, value is lower. But we are seeing a dramatic improvement.
The average transaction is lower. So are you saying there's a lasting impact here that you're anticipating for consumers?
No, I don't think so. I think it's a temporary impact because, of course, you will have inventory spillover, and there's a lot of promotional activities going on. So I think that over time, it will normalize, but it's going to take a while. We expect China to be back at previous year's level, probably by the end of the second quarter. The best model to look upon and say, how will the world eventually come back and reopen?
And what are you projecting there for markets like the US and Europe?
So our projection for the second quarter is minus 40%. So, dramatic, further deterioration. But the reason is that pretty much all of April, 80% of the world has been closed down. We expect slight openings to take place in May and subsequent more in June. But we are seeing, again, as I saw in China, a dramatic upturn in the e-com. And then, as I said, sequential upturn.
When we do start to open stores in the United States, how's that going to look? What sort of changes are there going to be for shopping?
There's no doubt that social distancing is going to be a big part of it. And that's what we already see in Europe. So how many people do you let in the store? Are you going to wear face masks? And how fundamental has the shift been to e-com? There's no doubt that has accelerated. You might have a somewhat, going back because you want to be in the store. But the stores being full of people in the short term, I don't think it's going to be socially acceptable.
So you project a 40% revenue decline. Why is that not even more with 70 to 80% of your stores closed? Is online really making up the difference?
No, online is dramatically growing, and we expect a sequential improvement also in China. And China is such a big market for us. Last year, China was 23% of our revenue. So if you take China's 23%, Korea is about 3 to 4%. Both of those are coming back. And last year, our e-com business was around 13%. Of course, that is dramatically expanding. So that's going to pull the quarter. And then we expect, a gradually opening in different markets across the world in the second quarter.
What's going to happen to retail overall? I mean, your company was doing well going into this, but so many department stores and other bricks and mortar mall-based retail were suffering. Now with a complete shutdown, I think there's some real questions about whether some of the big stores actually open back up.
I think it's a very important point you're on. There's no doubt the number of the very large stores are not going to open up again. And that's where you're going to see the profound change to, as I said, online. We will continue to have a very strong retail landscape. And what will happen for the sporting goods industry in the medium term, there's no doubt that the coronavirus has made people think much more about their health and how much sport and how healthy lifestyle to live. And that will eventually be an upside for us. That's number one. Number two is, that's more the medium term. Number two is, if you've been confined to a small space for 6, 8, and 10 weeks, I think there's nothing else that you want. You just go out and move, whether it's walking or running or just doing something. So I think sporting goods, as hard as it sounds, will eventually benefit from the consequences of the coronavirus.
Kasper Rorsted, CEO of Adidas. And in terms of which products in particular are benefiting, interesting little tidbit he gave me. Sales of the Adilettes, which are those sandals that people usually wear around the pool in the summer, are actually growing hundreds of percentages as people work from home. Obviously not nearly enough to make up for the huge decline in sales that they are seeing globally, with 70 to 80% of their stores closed. And guys, just on the conversation of the balance sheet, which has really become front and center for so many companies this quarter. And there were some questions about Adidas, because Kasper confirmed that they did take out a $3 billion loan from a state-backed loan from a German bank, just to protect themselves and to access liquidity as much as they could during this ongoing shutdown. He did say they have 2 billion euros of liquidity, of cash, to get them through the year if needed. They're feeling good about that. They're paying their rent now, which there were some questions about that as well, and their bills. Though they are, Carl, facing, like so many of these other retailers, not getting paid on time from their clients, from their suppliers, and also dealing with a number of their stores virtually shut down. The stock tells a story. It's down 30% over the last 3 months. Nike, its biggest rival, only down 12% over that period.